Now, quite simply, support and resistance. Support is generally an area where buyers come in and think there's value and start supporting the price. Conversely, resistance would be the opposite of that. This is where investors would typically think this share price is a little bit too expensive or maybe a little bit overvalued, and I'm going to take some money off the table. Now, here's a small example of a ranging share that has a very definite horizontal support and a horizontal resistance. Guys normally coming in here, taking their money off at the top. And this could carry on for quite a while. This is a very basic interpretation of support and resistance. The darling of the stock market, Aspen, also an older chart, but this is just to prove to you as a longer term investor that you should be looking at both rising supports and horizontal supports to help you best time your entry. Because if you're getting into a solid company with solid performance and a solid trend, your investment should give you solid returns without worrying about the dips and the noise in between. So let's first look at rising support. Quite simply, we again are touching bottoms and we have a visual trend that this share price tends to go up. Now, if we combine the concept of horizontal support as in the previous slide, horizontal support is we need to find this little bit of a bottom, somewhere where I can get in, somewhere where investors are looking for value, somewhere guys are starting to pick the stock up. And this is where the stochastic oscillator is going to help you a lot. But the perfect trade is going to be one where a rising support and a horizontal support meet. That is going to give you your best odds and the strongest possibility of higher returns. So very easily look for points of horizontal support and be patient on this, because if you had bought this previous breakout on the stock, or you might have missed this previous breakout and you might have had to wait 2 or 3 months for this stock to come down to your support level, guys would have got anxious and maybe bought it a little bit too late or even too early. But as this rising support comes up, you start getting stronger and stronger areas of support. Now, this is a chart that I based my own long-term investment on, and I did buy Aspen at around 265 Rand. And the share price today has broken out to make new all-time highs. And I think the last trade before I left the office to come and do this webinar was 354 Rand. Now, the moving average I want to talk to you about today as a longer-term investor, this is where you switch over to your daily chart to see how the short-term price relates to itself over 200 days. So it's the average price of this stock over the last 200 days gives you a very, very good indication of how well or how sick a share is. We like to say that any share trading above its 200-day moving average is healthy and is a healthy stock to buy when the time is right. Okay, dissimilarly, it also tells you when a share is not well. Now, here's a little stock that some of you might know called African Bank. Now, this is one stock I definitely didn't look at buying in my long-term portfolio. And this is based on the 200-day moving average. So, like I said, if a share trades below its 200-day moving average, we consider it to be unwell or sick. And here's a nice example. So we can see here, in about July of 2012, the share price did get a little bit of support on its 200-day moving average and then broke below it, where lots of guys exited their positions. It then had a bit of a relief bounce, and guys bought this stock, hoping that this stock would go and retest previous highs. Something clearly happened, which must have been very poor guidance on earnings or something like that. And this is a very clear signal that this stock is now starting to get seriously sick. A nice big break of the 200-day moving average, followed by another week or two of selling with a little bit of relief rally. Now, guys, this is very important. For those of you who like to buy stocks as they're falling, it's probably the worst strategy you could ever have. We like to call it catching falling knives, and any African Bank investor would have told you that, because you can't see value in a share at 36 Rand. Why would you find value in a share at 33 Rand? And it continues to fall. Okay, so the same as we have an upward trend as before, here we can see a nice, well, not a nice, but a terrible downward trend with absolutely no reason to buy the share. And we all know what happened to African Bank a couple of months ago. It defaulted, fell off the main board at, I think it was 29 cents or 28 cents. And those investors have lost their money with very little opportunity of getting it back. So can you see how important the 200-day moving average is? Healthy stocks trade above this 200-day moving average. Unhealthy stocks generally trade below their 200-day moving average. And that's where the daily chart is important.